Hey everybody, Tom Gentile. Welcome to Patterns and Profits, we'll call it a bi-weekly podcast. I've been doing these a couple times a month. Thursday, October 24th, 2024. Got a lot to talk about today. I want to talk about McDonald's. I want to talk about the election. And you know what? I want to talk about what Applied Materials, AIG, and Affirm have in common. So maybe that'll give you a bit of thinking to do before I get to exactly what those three have in common. All right. So a lot to cover here today. Let's go ahead and start with McDonald's. If you've been under a rock, turns out there's an investigation into an E. coli outbreak in McDonald's quarter pounders. I like quarter pounders. Don't eat a whole lot of them, but I like them. But apparently, this outbreak's killed at least one person. Over 50 other people are sick. And they've determined that it may point to some slivered onions that were served on the hamburgers from some distribution company. So this came out beginning of the week. And it happened on Monday. It actually happened. It was amazing that news came out right after the market closed, because McDonald's was having a good day. And then next thing you know, it's down 10% in aftermarket trading. So I'm looking at this and I'm like, let me do a little bit of research, because every time I remember something like this happening, it caused a cut in a certain stock price. Remember Chipotle? And then, of course, we saw it coming right back. Now, the things I liked about this is that even though they're saying it happened with the quarter pounder, they're talking about onions that came from a distribution center. So if you look at what happened on Tuesday, look at the data on Tuesday and the day after that announcement came out, and you'll see we opened down, I want to say probably about 7%. We actually closed down 5%, right? That happened on pretty high volume. So, if you look at a chart at McDonald's, you'll see it literally going upwards since July. We're talking about a stock that was trading below $250 a share and was trading upwards of $315, maybe a little bit higher, prior to that news announcement coming out. Now, I look at that. The other thing I like to look at is volume. A ton of volume came out the day after that announcement because, all the fear and greed mongers came out to trade. The ones that heard about it, a lot of selling going on. Obviously, that's what caused the stock to drop. It did move higher throughout the day, but like I said, it was still down about 5%. Now, I want you to take a look at this. Don't take my word for it. This is an audio podcast. I want you to take a look at what happened the very next day. All right. Very next day, the information came out. So again, let me put you on a timeline. Monday afternoon, we find out about this. Trades in after hours like crazy. And, everything trades thinner after hours than during market hours. So then Tuesday, we get that information and we pop a little bit. Of course, then we see the very next day and we see it moving higher. Now, what I like to do, this is a pattern. This is the Patterns of Profits podcast. So I'm going to give you a pattern right now. I want you to take a look at what happens when a stock drops like that on huge, huge volume. What I'm going to look at is the wicks. What is the wicks? The wicks are the absolute high and the absolute low the day the news came out and made that stock either pop really high or drop really low. So you take a look at what happened. McDonald's popped real low. And then what I'm looking for is one of those wicks to be violated in future days, which means that if we go below the low, the day that all the news was happening, then we're likely to start trending lower. But if we go back above the high of the day that we had all the craziness, then the market's likely to bounce back. All right. So take a look at what happened with McDonald's the day after. The day after the markets had that big down day, we followed. Remember, we came up, and even though it was a bad day for McDonald's, it ended near its high on the candle. It then moved higher the next day, which tells me that this stock wants to fill the gap between where we were before the news came out and what happened following the news. What I mean by filling the gap is that this is a dip in the market, and we're seeing it start to move a little higher. Oh, by the way, did I mention we hit a Fibonacci retracement the day that the onions caused E. coli? Yeah, we came down to about a 38% retracement from the lows of summer to the highs that we saw here in the fall. In one day, we gave back a couple months worth of moves with McDonald's, but now we seem to be back to moving higher. So there's a high probability, not super high, but high probability that McDonald's is going to trade back up to its high here in the next few weeks, right? What did I do? I bought some call options. Bought some call options on MCD, and I'll let you know how those turn out on the next podcast. All right. A couple things I'm looking at when I look at McDonald's and I look at that big drop. It didn't affect the percent change too much because it's been moving higher quite a bit. So we saw about a 5% drop in McDonald's stock, but I mean that stock's been moving higher throughout the majority of summer. You know what did turn south? The MACD. All right, this is the moving average convergence divergence. It turned south, so that's a little bit of a negative. But the interesting thing is when you look at things like Bollinger and RSI, yeah, RSI dipped too, but it didn't go from overbought to oversold. It's still sitting right in the middle. But what I'm looking at is I'm looking at volatility, and I'm looking at volume, and the fact that we had huge amounts of volume on McDonald's, right, when that news announcement came out, told me that a lot of people got scared and bailed out of the stock all in the same day. So what happens when a lot of people bail out of a stock in the same day? Typically, that stock doesn't have any more downside risk, right? So let's talk about risk for a moment. So if I look at the days that McDonald's had that big move, all right, look at that swing. That stock was trading. The high was somewhere around 300, all right, around 300, and the low was trading. We were trading probably around I want to say 290, all right. So you had your high close to 300. You had your low over the last, when we had that big drop. That low came actually down to 285. So you actually had a big move from 285 to about 301. So it was about a 15-point move between the low to the high the day that happened, right? What do I do with that 15 points? I put that on 300, and my target's 315, which is where we were. So we'll see how that turns out. I'm pretty sure I'm going to have to do a video on this because I could talk about it all I want on the podcast, but this is a visual one. So once again, in the thick of things, McDonald's had some bad news that came out. The stock did not continue to go lower after that first initial drop, and therefore I smell a pattern. I smell a bullish pattern, and it's not with two all beef patty, special sauce, lettuce, cheese, pickles, onions on a sesame seed bun. The pattern I smell is a bullish pattern, and it looks like a 1-to-1, which means that we have a historical probability of moving higher. I think it's going to move 15 points higher. If it does go down and it takes out the low of 285, then I'm wrong. And so that's what we see. All right, so I look at stock price. I look at opportunity. I spot the opportunity. The stock opportunity is there's about a 15-point swing to the upside. You got 15 points of risk to the downside. The options opportunity, well, the options are a little bit high, so I spread those options. All right, I bought bull call spreads because I saw a probability there that made sense to me. Like I said, may have to do a video on this, so let's tune back in next week, and I will do a video on what I spotted in McDonald's and how I traded it. All right. Folks, what do Applied Materials, AIG, and Affirm have in common? All right, let's think about that for a little bit. Number one, they all have symbols, and they are all companies that start with an A. Applied Materials, all right, American International Group, and Affirm. All right, all companies that start with an A all have stock symbols that start with an A. Here's something else they have in common. They all have earnings coming up here in the next week to 2 weeks. Yes. But did you know that they have all moved higher the week prior to earnings, the last 4 quarters in a row? Yes. That's prior to earnings, right? The risk when you go into an earnings trade is, I see people do it all the time. They see a stock that's got earnings coming out today. They buy call options if they're bullish, or they buy put options if they're bearish today, and they ride it through earnings, and they hope to get a big win tomorrow. That's not a pattern to me. That's gambling. Okay. The pattern I see is what happens prior to earnings, because you don't have the volatility risk prior to earnings. You have the volatility risk when you go through earnings. So Applied Materials, AIG, Affirm, they all have been moving up. Go look at the charts of each. They all move up about a week prior to earnings. Here's the other thing. When I looked at the last year of all 3 of these, they all had, looking at let's call it near money call options, because they all moved higher. The near money call options all moved up on average. When you take the average of the last 4 earnings, all did a triple digit move. And so by saying that, they all have bullish opportunities that start next week. Yes. Okay. Wanted to make that apparent because, again, this is the Patterns and Profits podcast. I saw a pattern on McDonald's and took it. Right? What am I going to be doing with Applied Materials, AIG, and Affirm? I'm going to be looking to buy call options sometime next week on those 3 stocks, because they all have bullish opportunities that start next week. Right? And again, notice I didn't talk about any earnings this week. To me, that's the gamble. It's in my world, it's too late. In my world, it's too expensive to make money buying a call option today and trying to sell it tomorrow. Now, I know there's going to be a few of you that are going to say, but Tom, Tesla reported before they reported earnings, you would have had about a 4x gain in one day. And to those of you that say that, I'm going to say, yes, you're right. The call that I was looking at, the October 215 calls going into the close before Tesla's earnings, they were priced at about 8. These are the ones that expire Friday. So they only expire a couple days from now. The riskiest by far, the riskiest way to trade. But they were at $8. Well, guess what? Thursday they went to 32. Yeah, 8 times 4 is 32. It's a 400% gain. But you know what? How many times is that going to happen to you when you go out and you look at these big moving stocks? 1 out of 10? 1 out of 20? Maybe worse. Again, it's a gamble, folks. Even a broken clock is right twice a day. The rest of the time, it's wrong. Rules-based traders, what we do is we trade patterns that we can research. We trade patterns that have historical probabilities. We trade patterns where we know the risks, where we can understand and map the rewards based on average return. Basically, what I'm talking about is we're not gambling, okay? We gather as much information as possible based on the pattern to make a predetermined trade. All right? It's not a gamble. A gamble works long enough for someone to make a bunch of money, and I mean someone makes a bunch of money. Then they tweet about it, they get the crowd involved, and ultimately the crowd's the one that loses money. I don't want you to be the crowd. You know, you're going to see this stuff. You're going to go on X, or you're going to go somewhere, read it, heard about it, seen it, And you're going to hear about one or two guys or gals that made a bunch of money because they happened to be in the right place at the right time. And folks, again, it's not something that happens all the time. I want to find something that has a number of trades where we have a percentage of wins that's much larger than the percentage of losses. And then, and only then, do I go in and I plan and execute and manage the trade and follow the trade. All right. So there you go. Plan, execute, manage. That's the business plan. The gamble's not the business plan. All right. So I want your homework assignment. I'm not done yet. Homework assignment. Applied Materials, AIG, Affirm. Watch those stocks next week. And again, next week's not earnings week either. Or excuse me, next week's not earnings week. Next week's not only not earnings week, but it's also not the election week either. Because I think, I'm going to take a little breather on trading during the election because I think that's going to trump everything. Right? No pun intended. And I want to finish off today's podcast talking about the election. All right. So last week, I hope you had a chance to see it, but last week I did something called Convergence 2024. And I'm going to do a little summary on it because it's important that you understand in this 2024 election. And I'm not talking about who I'm voting for. I'm talking about what stocks are likely to go higher in a Trump election, what stocks are likely to go higher in a Harris election. All right. And so we talked about that. What we did was, as rules-based traders, we spot an opportunity. Now, how do you spot an opportunity? Well, you have to do a lot of research. You have to have a lot of data. And we went back and we looked at historical data. All right. We talked about convergences leading up to the election. We talked about the economic strength, which actually might even be a problem because if the economy continues to be too strong, we might not see rate cuts. All right. I think we're on the table for a 25 basis point rate cut by the end of the year. But if the economy is still strong, that might get pushed off. All right. We talked about cycles like the election year pattern. And I'm talking about the presidential pattern, which is a multi-year pattern. We talked about the buy in November and sell in May pattern, which is coming up in, guess when? November. But we also talked about looking at patterns on election year, during election day, and just after election day. And we went all the way back to the 2000 presidential election. Remember Bush Gore? Remember the hanging chads? All right. Remember what ended up happening? Defense stocks actually did really well during that election. Then we moved forward. We talked about George Bush versus Senator John Kerry. And what didn't happen in the 2000 election that really did happen in 2004 is we got that resilience in financial stocks. So then fast forward to 2008, and it was John McCain versus Barack Obama. All right. Senator versus senator. Well, I think the Republicans were really, they were definitely favored to lose because of what happened in 2008. But fast forward, Barack Obama wins the presidency, and we saw things like gold and defense stocks move higher. We moved into 2012, Obama going for as the incumbent against Senator Mitt Romney. What's interesting is Mitt Romney was actually up in the polls prior to the election, and then just a couple of days out, the polls swung back to Obama, and of course he won. But technology, remember, we were past 2000, we were 2012, so we saw technology like not only Apple, which had rebounded, because you remember 2008 was the iPhone was just starting up. 2012, we already had 4 years into the iPhone, but so Apple was moving. But then you had Google that it was 8 years in, I believe, on its stock, and then all of the other technology stocks started to add to this. And again, also, I can't not get out of 2012 without talking about United Healthcare because of the Affordable Care Act. Moving forward, we saw the presidential election of 2016, Donald Trump versus Hillary Clinton. We know how that turned out. And then we JP Morgan, they did really well. So did the energy stocks like Exxon and Schlumberger. 4 years ago, we had a presidential election between Donald Trump and Joe Biden. And of course, we know how that turned out as well. I'm not going to get into that other than the fact that we saw technology stocks make a roaring comeback. New ones, though, not new ones, but I'm talking about ones that were in the background, like Microsoft and NVIDIA, that became in the front. And then, of course, we also saw stocks like Pfizer and Moderna do real well because of COVID-19 and the vaccine. So we talked about going backwards and researching so that we could find those shorter term patterns moving forward that I believe are going to start to happen in about, well, less than 2 weeks. Less than 2 weeks. I want to see stocks that historically have done well between election day and the end of the year. And to do that, we went into the money calendar and we looked at things like trade duration. How long is it going to last? I want this thing going all the way to the end of the year. I want to find those stocks that had the best accuracy. By the way, we looked at stocks that only had 100% accuracy on election year going back to the year 2000. All right. I wanted to find those that had the best percentage return. And what we did was we looked at things like Power Meter to get the ones that were performing the best. And then we separated them. And we said, which ones performed best in a Trump administration? Which ones performed best in a, well, I'm going to call it a Harris administration, but we're using the Biden administration because his policy is her policy. Let's face it. So that's how we're able to go back and really get an idea on what some of these stocks were likely to do. So in a Trump win, all right, we talked about 3 industries that we expect are going to outperform. And I gave you a stock pick as well. And they haven't started yet. That's why I'm bringing it up on the podcast. This isn't old information. It's only old information after the election. So XLE, that's the energy select sector, expected to do very well if Trump gets elected. The aerospace and defense ETF, that symbol is ITA, also expected between election day and year's end to move higher. And XLF, let's not forget financials. I mean, come on. It's worked so many times before. So XLF should do very well indeed. And I picked a stock out of XLF, this financial stock, Schwab, SCHW, has had a 100%. All right. It's batting 1,000. If you go back and you look at election at the time between November and beginning of November, end of December, during election years only, back to the year 2000, and you'll see that it has outperformed. So I like Schwab, right? We talked about Schwab, that the prediction we're looking at is about we think it's going to move up to around 80 by year's end. Okay. So around 80 by year's end. It was trading around in the low 70s at the time that we looked at this. And we were looking at some call options and call spreads. And anyway, there's my picks in a Trump. If we get a Trump, if Trump wins in November. If Harris wins in November, then I'm looking at things like, you just go back and look at Biden and then you just double down. Environmental policies, progressive initiatives. So where do we go there? I see the solar energy ETF, TAN. Okay, that's the Invesco Solar ETF. I think TAN will be a big winner, and it better be because it's been a big loser this year. You know what else has been a big loser that I believe would turn around in a Harris election? Would be the Global X Lithium Battery ETF. That symbol is LIT. All right. For the year, LIT is down about 40%. So even if it comes back to half the way to break even, that's a big move. That's a 20% move in 2 months. And finally, I'm going to give you one that if Harris wins is already making all-time highs, and I expected to move higher. I'll bet you can guess this one. I'll bet you guess this. So here's a clue. This ETF has been popular all the way back since the days of Barack Obama. There you go. XLV, the Healthcare Select Spider Fund. XLV. It's near all-time highs. I mean, the one thing that keeps going up is the cost of healthcare, and it's equated in this particular stock. If you want to hedge, if you want a good hedge on what you're paying for premiums, then owning XLV is a great hedge to what you pay for premiums. And my stock pick for Harris, and this was a doozy, and I picked this a week ago when we did Convergence 2024, Tesla. Now, Tesla's had a big move after its earnings. We know that. It could very likely be trading around the year-to-date highs sometime during the election, but I still expect it to move higher. We're looking at Tesla probably moving up about 10% higher if Harris were to win that election. Now, you might wonder, you're probably saying, but Tom, Elon Musk is on the side of the Republicans. Elon Musk is out right now campaigning for Trump. Why in the world would Tesla go higher? Because Tesla, when you think of EV, when you think of batteries, I mean, this is the pioneer. This guy's done more for electric vehicles and battery technology and space and boring holes and freedom of speech with X than anybody else I can think of. And so just in the, I mentioned what, 5, 6 things there, just in battery and EV alone, it looks to drive Tesla higher. I would not be surprised if Tesla was trading in the upper twos, maybe even as much as $300 a share by the time we get to the end of the year, especially with a Harris win. And we looked at options on Tesla, and they're expensive, right? So if you want to cut your cost down, call spreading is obviously the way to go. I've sat here and talked now for almost a half an hour about patterns. We started with a pattern in McDonald's, all right? Spot the opportunity. The opportunity was, fear, running for the exits. And that looks like a bullish opportunity. And then we talked about earnings, and we talked about Affirm, and we talked about AIG, right? And we talked about Applied Materials and what they all had in common. And those were, so, you got I'm looking at a 30-day potential trading opportunity with McDonald's. I'm looking at 1-week opportunities in the earnings area. And I'm looking at 2-month opportunities that start really election day for Tesla or for Schwab or for half a dozen ETFs, depending on who wins the election. All right. So what do these all have in common? They're all rules-based patterns. That means by spotting the opportunity, we go back and we look at history and we look at repeatable patterns. And then when we find something we like, we then decide, do I want to buy the stock or do I want to take an option position? That's creating the trade. Finally, once you're done with all that, then and only then it's time to go in, look at your broker, look at your brokerage platform, and see if you can place that trade. All right. So there you go. I mean, the other thing is, are there any stocks that go up regardless of who wins? And are there any stocks and sectors that went up the last, 6 elections, 100%, regardless of who wins? Yeah, I got them, and they can be yours because we ran a special on the money counter. If you're watching this on YouTube right now, go down and check out the link that I have in YouTube in the just above the comment section, because you're going to see a money counter special, 58% off. But you better hurry because that expires tomorrow, October 25th. That's why I want to get this podcast out to you today. All right. First time ever, we're offering the money counter with hub.com. You get a year of the money counter. You get that special report with those 3 stocks that go up regardless of who wins. Right. You can bet I'm going to be on all over those in the beginning of November. I've got a 4-part video series, how I trade the money calendar. Just finished a quick start guide. That's available too. We have live chat in the Hub platform for those of you that sign up for the money calendar. And there you go. You can only get it using the special link that's below this video if you're getting this podcast on YouTube. There you go, folks. That is it for me for the day. Want to let you know I will be going to take next week off. I will be back on election week. All right. So until then, have a great rest of your week. Happy Halloween. And of course, make sure you get out and vote.